Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I can hear you loud and clear, Coach Jay. Wh- How are you doing today?
Doing well. Welcome to all of our buzzer beaters. How are you doing today, Coach?
Um, a little bored. A good
Yeah,
bored. Stayed out of major trouble.
that's always good.
Um, I lost well.
Nice.
Let's put it that way. How about yourself?
Did not take a trade in a funded account at all today. Not at my personal account, not at my XFA, nowhere. I think I said it while I was on Topstep TV today that these are the type of days where I look back at my trades and they usually end up losing days. Probably 85% of these days end up losing days for me. So I decided that I was not going to put any real risk in these markets. Uh, so I'm going to count that as a win.
So, what experience led you to make that decision?
Seeing range bound markets and finding myself in the middle of them every once in a while, or every time we get one. It's just, you know what, there is potential for money to be made here, but the way that my brain processes market information, um, I'm not comfortable putting real risk behind, which is okay, right? I don't need to trade every day. It's 250 trading days in a year. Um, Sometimes it's nice to just have a mental break off from having to make those decisions and then leaning into the opportunities that really fit my personality.
Great. For all our listeners out there, that's sound advice. That is experience.
Yeah. Took a while to develop that, right? Because we approach the markets with the mindset that we have to do something every day. And that mindset I feel like doesn't account for losing days. Um, or days that just don't fit anything that you're looking for. Right? You can try to force the markets to do something, but at the end of the day, they're going to do what they want to, and kind of paying attention to uh, what they're saying instead of what you want. I think is extremely important. Uh,
Yeah. 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 If you've
Welcome.
ever been there, you
Yeah.
know.
Oh yeah. Oh yeah. 100%. Welcome to At the Buzzer, our market recap. If this is your first time here, I am Coach Jay. That is Coach Paul. The goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a Topstep Performance Coach since June of 2023. Been trading for the past 12 years and in the futures markets for the past 5. And that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Yeah, I'm Coach Paul. I've been with Top Step for a little over a year and a half as a performance coach. I've been involved in the futures industry for 4 decades. I'm here to share some of my experience and knowledge and maybe assist you in becoming a better trader.
Awesome. Thank you for that, Coach. I see some questions already coming in from Gigi DeMonico talking about level 2 data. We'll talk about that a little bit when we get into the markets, but really good question there. So I do want to come back to that one. Looking at the news this morning, we know the big news is obviously tomorrow with the FOMC rate decision. Last time I checked, we were at like a 95% probability of a 25 basis point cut. So if we see anything outside of that, uh, that would be considered
Mm.
a surprise. Let me check FedWatch real quick just to see where we are. Yep, 95.4% probability of a 25 basis point cut, which means there is a chance that the Fed does something to surprise us. There's always that chance, though.
Would you consider that a Christmas surprise?
It could be. It could be. I don't know if they're wrapping anything and putting it under the tree, but let's see if the Fed surprises us. The last rate decision before the year is up, and of course, before we have a change in administration in the U.S. Uh, but outside of that, not much planned news today. We did have a housing starts number come out. Nope, that was we had retail sales. Retail sales out this morning came in at 1.9%. Let me make sure I'm reading that right. Yep, 1.9%. Forecast was 2%. And then we had a Canadian CPI number come out as well, pretty much in line with expectations. Fairly quiet day. Market's waiting for tomorrow. We have housing starts and the FOMC rate decision tomorrow. So that is that on that. Anything else you got on the news, Coach?
Nothing else on my front. I really
Nice.
just all eyes on the Fed, right?
All
So
eyes on the Fed. Let's get over to the charts then. I'm going to pull up quote board real quick. There are about 35 different markets that we can trade with Top Step accounts, not just the equities. And today, our biggest percentage movers to the downside, we had heating oil down 1.39%, RBOB gasoline futures down 1.41%, and soybean oil down 2.61% for our biggest percentage mover to the downside. To the upside, we had the Japanese yen up 0.39%. Micro Bitcoin futures up 0.57%, and net gas, our biggest percentage mover to the upside at 5.41%, which was insane because most of that move happened in the middle of the day. We will talk about net gas when we get into
it's
the charts a little
always
bit,
on
but
the top three, one
always,
way or the other.
always. Yeah, I think it was top three to the downside yesterday. It was number one to the downside yesterday, number one to the upside today. Really great market. If you can catch part of this trend, saw some traders in the Top Step TV chat saying that they were long in the Nasdaq. Sorry, in the Nat gas while we were trying to figure out, what was going on in the Nasdaq. One of the biggest things we talk about here, Coach, is that there's opportunities in other places. Um, you know, on a day like today where we can expect consolidation in the equities, if you're not a range bound trader, um, maybe looking somewhere else can present some pretty clean trades to you.
Yeah, I see that micro Bitcoin is starting to become popular.
Yep.
We've been
Follow the
we've
money.
been on that. Follow the money. It's a great place to trade.
Yep. Follow the money, playing the in play markets, as SMB Capital would call it. Um, they're focusing on stocks a lot more, but trading the market that's moving. Right. It's okay to look somewhere else. Uh, obviously you don't want to bounce around to 35 different markets, but once you find one that's moving, something like nat gas, uh, it's okay to stay there. Let's round out our big four. We have gold down 0.35%. The S&P is down 0.41%. Nasdaq down 0.43%. And where's crude oil on this list? Crude oil down 0.78% for our biggest percentage mover to the downside out of our big four. I have a net. Why do I keep confusing nat gas with Nasdaq? What's going on today?
Um, Starts with an N and an A.
There we go. Let's go to here. Let's see if we can do this. Let's go to the four equity markets today. I'm gonna put the Nasdaq on the top left. We'll put the S&Ps on the top right. We'll go with the Dow on the bottom left and the Russell on the bottom right. We're gonna go to 30-minute charts for all of these. As soon as I figure out how to link them, interval. There we go. All right, Nasdaq top left, ES top right, the Dow bottom left, the Russell bottom right. Um, what are you seeing here, Coach? I have 30-minute charts up for each one of these markets. A little bit of a different story. We've talked about this different story before, and man,
Yeah, the Dow is not even stair stepping anymore.
no,
It is going down.
it's crazy how consistent this
Um,
is.
yeah. Um, so we've been touching upon that, but overall, when we go blow up into today's action, um, if, if we slap on our favorite VWAP, especially this morning, it was flat, which you know can be expected in front of FOMC and holiday markets. Um, I want to thank Mr. Volume Weighted Average Price, whoever that is, or Mrs., who came up with it because it
Genius.
saved me from a lot of chop. I took one trade, lost $120 in the NASDAQ. And once after the first hour, what did we see? A flat VWAP in the middle of the range. It can, if it moves somewhere, it can do it without me, and I'm happy. The fact that it just sat there, it told me not to chase. Now, because I am not a good range bound trader, I stayed away. I lost well, and I'm happy about it. How about you, coach?
Yeah, I agree with you. Right here, we have the opening ranges and VWAP for each one of these markets. If we look, the Russell was really the only market where volume left the opening range in any kind of decent time frame in order to take a trade. But I'm with you, Coach. We were on. I was on fast markets this morning. Looking to find a trade as we
Yeah.
always do, and we start with the equities. And it was difficult. The first trade that I kind of even thought was a decent idea came an hour and 15 minutes into the market, and I think we were in that trade for maybe a minute and a half. And on days like today, that's exactly what I'm looking for. I'm a momentum trader, and I don't mind sitting in a trade as long as it's presenting me what I want. The reason I think I personally have a hard time with range bound markets is because uh, you have to sit there and wait for the market to do something, right? I actually thought about this. I went on a walk after fast markets, and I thought about the average trade time for that trade, right? Trade time where we're in the markets. If we take trades like that one, the one that we took in the house account, we got short at 22,296, and we pretty much took the position off at 264. That entire trade was this 3 minute candle right here. So I thought about that a little bit because we hear the conversation of time in the markets. You catch a part of the trend, and if the markets are trending, great. But uh, I actually consider this trade, although we were actively in the markets for maybe a minute and a half, I consider that an hour and a half trade because it took the time to set up the trade idea, right? One, I have to analyze the market personality, right? What's going on, right? I didn't just look at a chart and say, "Oh yeah, I want to short here," and was in it for, in the trade for a minute. It took an hour and a half just to determine that the markets were range bound and looking for an opportunity to take advantage of that range. Now, um, that's what the market presented to us on the short. Was I right about the direction? I wasn't, right? Immediately after we got out of that trade, the market popped right back up. But if we look at this price action, anyone who had a really strong directional bias today in the NASDAQ got hurt. Because, if you were looking for a breakout up at the highs, it didn't happen. If you were looking for a breakout at the lows, it didn't happen. So just assessing, quick in and out, and going from there.
Well, I watched that trade. It was you did it was quick,
Yep,
well managed, um, and it was profitable. That was a pure scalp. Now that's
100%.
something I don't do. I was impressed that you had good discipline on it. So great job.
So the funny thing is, Coach, I didn't want that trade to be a scalp, uh, but I had to trade it like one, right? So uh, we don't get to see the markets like this; we get to see it this way. And the reason I was comfortable taking that short was because this anchored VWAP was starting to, lean towards the downside of this opening range. So maybe kind of preempting it a little bit and saying, yeah, you know what, if volume catches up to price, maybe we get some sellers to continue to come in. Um, but then you have to look to the left, right? What has the market shown us so far? And there's really really no follow through. So getting into that trade, if we would have dropped another 100 points, I would have been happy with that. Um, but that was to me an example of just taking what the market presented to you, um, and going from there. And I was happy not taking another trade after that.
Yeah. Um, and um, once again, it VWAP did not leave the opening 3 minutes.
Right.
Price did. And it was funny, as soon as you got out, it was within a half an hour of making new
New
highs on
highs.
the day.
Yep. Yeah. Yeah.
Um,
Uh, we get the question
but just to
often,
say,
how do go ahead, coach.
if you got chopped up today, learn from it. I can tell you, I have, so I understand it. Um, so I was on Top Step today with one of my VIPs, George. I had
All
fun.
roads.
All roads lead to VWAP. And no, we're talking. It's about poker. The principles of poker are also the good principles in trading. And actually, I see a question out there. What is a good percentage of max loss? Um, and we've talked about that today, and I want to answer that here. Why I'm so happy of VWAP. It helps me visualize that this thing is going nowhere. And if I am just trying to make money, not trading a plan, I'm going to get what I'll just call randomized, random movements, and I'm going to get caught both ways. So, two things: understanding it saved me money when I saw that, but even then, when I would just try and make money, force my way, I'd lose half my account in a day.
Yep.
So the next thing is like I myself will, and there was a question there. I myself will limit myself to 12%. I strongly suggest anywhere from 10 to 15% of your account. 20 is pushing the limits, I think, too much. 50%, y- y- I don't see many. I don't know. I don't see a high probability of people recovering from a 50% drawdown. And think about that. If you go on 50% drawdown, you have to make 100% just get back to even. So avoiding that on days like today it is when I would really get spun around and lose a lot of money. So why I bring that up, Coach Jay, with that trade, it was quick decisions. It wasn't doing what he was looking for and cut it off. Um, Understanding the situation early on. It's something you can do, you can develop, and when you do that, you can survive and then thrive.
Awesome. There was a question that we got in the chat also. Let me from Gigi DeMonico. I take the level two market data. Can you explain a little how it can help me look at this data, please? So what I use level two data for, you can see the depth of market up here on my charts. Uh, some people use Bookmap or other tools. What I'm looking at, I don't just use the depth of market by itself. You can see I have a time and sales up next to it. So what I'm personally looking at is where orders are getting placed in the market and then how the market responds to those orders. The reason I have time and sales up is because it's going to show me all of the executed orders. Uh, you know, Sometimes people, talk about spoofing orders and things like that. I don't worry too much about those, but I really get information from executed orders, right? So, uh, for example, let me go over to the S&P. On the S&Ps, while we were trading down towards these lows, we saw some bids stepping in under the market, which means passive buyers. So I'm reading how the market is responding to those passive buyers. Are we just selling through their orders and continuing to go? Are those passive buy orders slowing down the momentum? And that's exactly what happened today, right? Towards these lows, there were some bigger orders out there. They did get filled, but we didn't see the immediate follow through afterwards, right? So just thinking about who the market participants are, thinking about their orders getting filled, right? If I'm buying hundreds of contracts down here, uh, do I allow price to just kind of sell through my orders and keep going, or am I defending these prices? So, um, what I would say is if you haven't used level two data before, just go with a market like the S&Ps to start and just try to identify patterns, right? When you see a big order out there on the DOM, see how the market responds to it the same way you would do with a candlestick pattern. And you'll start to notice patterns about how the market fills orders, runs away from orders, and things like that. And you can go from there. Coach, you use level two data at all?
No, I don't. So I have no comment.
There you go. You don't need it. You don't need it. Uh, let's. Where do we want to go from here?
Someone said, "What's a good risk per trade on a contract amount to use on a 50K account?" All right, the 58K account. What's the most you can lose?
$2,000,
2 grand. So what's 10% of 2 grand?
200.
That's a lot of money to lose on one trade, right? I mean, you can only be wrong a handful of times and you're in big trouble. So what's half of that? 100. That's 5%. So micros are absolutely necessary trading a $50,000 combine. I would limit my losses to 100 or less. How about you, Coach?
Yeah, I would agree with that. 100 or less per trade for sure, and that's giving yourself maybe two losing trades in a day before you got to start thinking about cutting it off. And that might sound tight, but like Coach just said, trading micros, right? Trading a couple micros, one or two micros to start the account just to get it off the ground. Um, we got to think these are you know there's enough size in these accounts to, and we see people, right? Anybody who's on the leaderboard started with an account similar to your account size, but they've built the equity in those accounts over time, right? Not trying to get onto the number one spot in the leaderboard in the first week of your account. Um, there's just not a lot of room to do that. So keep your trades small initially, and then as you build your account, you can size up from there. But yeah, $100 a trade. I like that, Coach.
That's a great question. We don't get that. It's funny. We don't get that question too often.
Yep. No, we don't.
And we're talking about a mindset, and we all just we want to get in here and start ripping it, right? Banging it out.
Yep.
And I understand that, but what is the first priority? The first is to keep the account alive. So by asking that question, that seems to be your focus, is keeping that account alive. That's a great mindset because it's really, and I talked about earlier with George on a VIP. Um, in poker, you're going to go and sit at a poker table. You have to know what the ante is.
Yep.
If you're sitting there with $100 in your pocket and the ante is $50, you're really not going to survive, are you? So, great question. Think in terms of percentage of your equity or your capital.
Yep. And just a quick question, Kevin. What about the 100K account? Just do the same math. What's 10% of that? 10% of $3,000 is 300. So somewhere close to that, right? 100 to $150 a trade on a 100K account when you're first getting started. Just to give yourself, a couple of opportunities. And again, it might sound small. Trade micros in the beginning. When should you start trading minis? Keith, that's a question that's going to be different for every person. If you're in a 50K account, I would almost say that you probably shouldn't trade minis. But maybe when you have, a 5K balance in your account, right? 5K balance in your account. Something that's not going to put pressure on every trading decision to be correct, right? Especially most of our traders are probably trading the Nasdaq. Even a one lot in the Nasdaq. Um, let's just look at the chart real quick. Go back to today. This move right here in the Nasdaq was 30 points to the downside. On a one lot, that's about $700 in less than 3 minutes. Um, and that was a move where I actually remember this move. I was looking to get long here. I didn't click the button. If I clicked the button, I would have been wrong very fast. And for a decent size. Now it's a size that I was comfortable losing in that account, but still, right? You don't get to control that. And then, hopefully, and this goes to Jen and John's question, how do you cut your losses? Hopefully you cut your losses, because if you don't and you get kind of stunned by this move here, there's another one coming, right? The Nasdaq usually doesn't just throw one haymaker and then just let you recover for the round, saved by the bell. Nope. There's another one coming. So if you don't react quickly, I'm going to knock you the F out, is what the Nasdaq normally does. And that's this candle right here. So be aware of that, right? Where, yes, we talk about managed risk and identifying areas, but then sometimes this happens, right? And if you were getting long in that candle back to back, right? You got 6 minutes to make a decision, and it better be the right decision, or your account is gone. So having that pressure of trading all the time is not sustainable. It's not sustainable.
Well, you just said it right there. If you're in a situation where your account is gone on one trade, by definition, by default, you're gambling. Think
Right.
about that. Because it's about managing your account. And I'm going to tell you, whether you come in here on a combine here, if you get good and you say, well, I want to go out in professional money management, you know what they do? They look at all your trades. They want 3-year track record. And they don't want to see any time where you're taking a too large a size. They'll just say, no, thank you. I mean, they don't
Yep.
care what your return is. They
Right.
look at it through with a fine tooth comb. So be professional.
And then Jen and John says, how do you cut your losses? Accept them before you put the trade on. Makes it a lot easier. And truly accept what that number is, right? Let's say for the suggestion that we just gave, right? Coach Paul just said, on a 50K account, maybe $100 per trade. Truly decide whether or not you can accept losing $100 on a trade, and then go from there, right? That number might not be 100 for you yet, right? That might be $50. Where every time you think about losing $100 on a trade, you might get sick. Now, in order to do this, sustainably and really make something out of it, you're going to have to accept more risk than that. But maybe you're not there yet, and you need to build up to that point. So accept the loss before you put it on. It makes it a lot easier to take the trade.
Yeah, when you accept it, or you think you accept it, you have some control.
Yep.
When you don't accept it and you don't have a stop, what's the first thing that's going to happen when you feel heat?
Stress, pressure, fear, want to cry.
All the above. And then the biggest fear is, oh, it could just keep going.
Yep.
And then out. And then it goes back to the direction. You get back in, and now the wheel starts spinning. So, a great point, Coach Jay. Understand that you need to, like I said, the poker example. Are you at the Are you at the $5 ante or at the $100 ante? And if you have $200 in your pocket, you can't be sitting at the $100 table. Period.
Nope. You have no idea what cards are about to come out. Great conversation though. Good stuff. Wow, Chauncey, my son got a concussion taking a charge last night. Wow, sorry to hear that. It's a tough kid though.
And
Standing in
he's,
there taking a charge.
I want to give him a clap.
Yeah.
You could get a concussion by many different ways, but I mean, that doesn't happen every time you take a charge.
Right.
Tough kid. Good on
Tough
him.
kid for sure. You ever do that drill, coach,
Yeah.
where players just have to stand in and take a charge? The
Well,
hustle drill?
the hustle drill, and there's ways to do it.
Yep.
A lot different than when I was young.
Yeah.
I mean, that was like really full speed, but actually working on falling properly. We used to just basically touch and sit. Um, but
Mm.
that's not always available in the game. But doing the right thing, but taking a charge, that's awesome.
It's like full speed stepping in front of the Nasdaq. Yeah. Crazy stuff. Let's look at gold here. Let's look at gold a little bit here. Um,
Hmm.
continuing to sell off. We are trading 26.63 under the 200 moving average on the 30-minute chart, which is up at 26.59. If we look at today's session, not the most convincing move in gold, but decent opportunity.
Boy, once again, last night we're starting to get this pattern. Last night we had some urgency on a buy side that failed
Yep,
relatively quickly. You lost money on that, y- small amount. Now we're talking about here's it's someone asking about taking losses, taking good losses, small losses. Let's just go through this one from the beginning. So the first half an hour we framed out. And we see VWAP leave 1, 2, 3 here. So let's say I have a $50,000 combine. I have $2,000 on one trade. I can risk 100. All right. Micros in the gold probably fit this. I don't know yet, but we'll see. If I buy it as it breaks out, where's $100 risk on a micro? Well, it would be 1,000 on a big one.
where would that be? That's what is that? 1,000 on, is that 10
One
points? Is that
thousand
right?
is $10.
$10, right? $10. Oh yeah, you're way out of the way.
Yeah, so it's $10. Yeah.
Somewhere down here if you're buying it.
So right here, if I want to take that trade, uh, I'm going to risk new lows or $100. You make the choice. Let's
Yep.
just make it easy. $100. Now, does it rally $100 outside of that? Doesn't look like it.
Never does.
Uh,
About 60% of the way.
60% of the way. Am I happy? I'm good. We break back under VWAP, and here you have a choice. Do I get out when it closes below VWAP, or am I happy and just risking the 100, or do I tighten it up? Now, this is a way of cutting losses. Now, you gave yourself ample exposure to risk. One of the things, another name for trading is exposure, right? Now, you expose yourself some risk. You might even say, it's not doing what I originally. If it gets under VWAP, I'm out. I gave it some time.
Yep.
But that's good decision making. Or I'm going to bring this back up to unchanged. That's cutting your losses. Now, here's where not cutting your losses. I'm I'm stubborn. It was up. I was up $100. Well, I don't know whatever it was, but that's mine. I need to get that back because they took it from me.
Should have took it when you had it.
And,
You, ne- you, you
am I
never know
being
what you
an
got until it's
asshole
gone.
here? Yeah, you don't know. I don't want to sound like I'm just some asshole talking. I've done this, so I know this feeling. Okay, now it comes back. I should be out where my stop is, but now, you know, we used to call this cancel if close stop because now I don't want to take that loss. Originally, it was said Now this is where accounts. Oh my God, I didn't even see that coming.
Yeah.
So
Take the
I
loss.
just using this as example. When you take and accept the risk up front, all right, you get some new information. All right, it's rallying, and then it's starting to come back, and you have to make a decision. Well, I keep my original risk. Do I want to get out, or do I want to bring it to break even? That's how you cut losses. There's nothing to stop that from just going to hit your $100 stop within a minute.
Right.
That can happen. Doesn't happen all the time though, but that can happen. That's how cutting your losses. That was a prime example right there.
And if you don't accept this, right? If you don't accept this loss, you lose the 100 initially. And like you said, like coach said, maybe you cancel it and say, no, it has to keep going up. How much more do we lose, right? There's another $150, $170 that the market moves to the downside. That's with one micro, right? How many of us are trading one micro, right? So if you're trading the minis, that's another $1,700 uh, because you're not accepting the loss. This is how you take a loss, right? Um, by knowing that the market can do whatever it's going to do. And maybe just understanding that your read is wrong. I think a lot of times what happens is when we read the market wrong, we take it as like a hit on our ego. Like I don't know what I'm doing. Um, and you're right. You didn't know. And that's why the market went against you. That's okay, right? But there are going to be times where you know as well, right? Which is fine, right? Getting the market direction wrong. I got it wrong today on the Nasdaq by the when we took that short. Completely wrong. But in trading, you don't have to. And coach, I love this quote from you. Trade right. Don't worry about being right. Right. The focus on being right hurts a lot of people because uh, we take it as an ego hit when we're wrong, um, when we shouldn't. We have no control over what these markets do. We only have control of our input in the markets. And when you don't accept the loss, you're trying to control something that you will never have any control over. Uh, Gave you an opportunity to get back out for 100 if you were able to hold through all of this, though. But how many of us are doing that? You probably added a couple contracts down here,
Well, if it is, then you're risking a hell of a lot more than 100. And
right?
this is a great example. There's nothing wrong with they took away the toy. You were long, you were up money. This is going to happen.
Yep.
It's not if, it's going to. So, on the other side, if you wanted to sell it, you would have to wait and be patient.
Yep.
Um, so good
All right,
example there.
let's go over to the energies. I'm gonna go over to crude oil real quick. We just got a question from Nicholas saying, are you still short crude? It's playing out. Crude was a nice short today. We talked about, the high of this range being, an area of resistance. I believe. Did we roll over contracts?
Let me check. I told you I don't watch it anymore.
Yeah, I don't blame you.
Yeah, we're on Feb.
Okay, yeah. So you remember we were talking about 7120 as that area, but we rolled over, so it moved down a little bit. Look at this though. Normally in the Nasdaq, for example, we rolled over from December to March, and there was a 200 point difference in prices. Uh, in crude oil, it's like a 10-cent difference.
Cost to carry.
Right, where there's not much going on in these markets at all right now, but still the same idea. Highs of that range presenting opportunities to take a short. Crude looked like a nice short today, if you caught it, but not a market that I'm paying too much attention to. Nat gas, you know, consistently on the top percentage movers. I've seen Deanna, who is known as a crude oil trader, trading other energy markets, right? She's trading RBOB gasoline futures. She's trading nat gas. There are micros in nat gas as well, so you can trade those. But just look at the difference here. Even if nat gas is somewhat in a range, the range is wide enough to present opportunities, right? This is basically a trend day within a range bound higher time frame market, right? You have a off the lows, and not to say you're going to capture the whole move, but off the lows, you have almost a 10% move in net gas. Two-sided trade today. Uh, just presenting
Coach,
some real. Go ahead.
did we get a J trade in there?
Did we get a J trade in there? Let's see. Let's go down to a shorter time frame. Um, Not really.
All right.
Not really. I'm not seeing any exhaustion volume at these
All
lows.
right.
We kind of just got some continuation. It looks like we just came down to that gap that we had from Sunday, which is now looking like a medium time frame demand area. We came down, tested that, and then just bounced off of there.
Almost.
$33.10. I know Deanna was mentioning some options, some call buying in that gas down at this 3-1 area. Volume moves the market. I think they might be happy if they were long calls
Right.
there.
It's almost the same exact pattern as the last time I went down there.
Yep.
So yeah, if that's a program. Most like if that's options, that's definitely it. Some entity is buying risk.
Yep. So just keep this price in mind. Right now it's at 3.1. It's kind of the lows of this gap right here. We could see it, like Coach just said, twice, right? We came down to this area and it's been a great buying area. Now patterns are patterns until they break. The next time we come down here, does it hold? Do we sell through it? We don't know. But, you know, clearly presenting some opportunity. And again, it's almost a 10% move intraday, uh, which is pretty insane. Um, do you need wide stops
The
on this? I think trade.
widowmaker.
Yeah, yeah. This is a wild market. Definitely one as well that you want to accept losses. If you're going to be wrong, just be wrong about the direction. Because if you were shorting this the entire time because maybe you thought it was a short initially, you missed it, so now you got short down here, and it should just go lower. Uh, how much drawdown do you have in your account before we're paying for a reset? Which we don't want people to do, right? Just accept loss, move on. There's always going to be another trade coming. Um, any other markets we want to talk about, Coach? We have about 15 minutes left.
All right. Well, let's take a look at the interest rate since we have the big announcement.
The big one.
The announcement of all announcements. Let's start with the daily. Let's go with the 10-year this time.
10-year. All right. And Coach, real quick, what drives nat gas prices from a fundamentals perspective? I'm the worst person to answer that question. Coach Hoop's probably the best. I've heard him mention weather.
It's especially in December, January. It's a weather driven market. Um, it is one of the largest sources of heat, at least in the Midwest. I believe out east.
Yep.
So it's an on demand market. What does that mean? Like you're not ordering your natural gas on on Amazon to be there delivered the next day. You're cold and it has to happen now. Um, and it's so when weather takes a sudden turn, we've experienced some pretty cold weather here in the Midwest, a little lower than usual. And I
Yeah.
know out east, right?
I mean, today it was 50 degrees, but it's been pretty cold.
So that, and while the United States is the largest reserves of natural gas, some people have said it's the Saudi Arabia mm, of natural gas. I don't know. I'm not counting it. It's a huge reserve, but there's expectations, and then there's the other side of the equation, unexpected demand.
Hmm.
So that's why it can be so volatile. There's one more energy contract that's even more volatile than natural gas, and that's called electricity.
Hmm.
and it's traded. There's not futures. There are some that we can't trade them, but literally there that volatility is like 100%. Natural gas vol can be 50 to 75%. That means it can double
It's
quickly.
crazy.
So being an on demand, it doesn't have the choice of going, okay, well, I'll deliver to you in a month. No, it's now. So that's why there is so much volatility. So hope that helps you explain a little bit of it.
Awesome. Thank you. I have the 10-year daily chart up here, coach. And if anyone in the chat can remind us when the last FOMC meeting was, I just want to take a look back at those charts before we go here. We'll go back to the equities, but if you can remind me what date that was. 10-year up here, coach.
All right. So last week we went up and tested the 200-day moving average. A little short corrective rally was rejected right back down to near the lows of the move. Still looks pretty bearish. We're under all the moving averages, the 20, the 50, and the 200. Um, I wouldn't suggest trading this in front tomorrow, but just to
Definitely
get
not.
an idea, this market is poised. I mean, this is a pretty bearish market. Fundamentally, there's a huge deficit. Um, there's talk of tax cuts and a huge deficit. It only makes a deficit bigger. So that's where the market's sitting here. I think tomorrow, if we close below those lows from last month, um, we could see quite a downside move. So I'm a little bearish on it, but
If we
like anything, measured risk.
There we go. If we zoom out a little bit, we go back to 2023, 2023's lows. There is still some room to the downside. But yeah, it looks pretty heavy on this daily. Really nice rejection here. Uh, that's going back to a question we had. Can you speak about how you use the moving averages? Coach, these are your 20, 50, and 200 moving averages.
Hmm.
Can you explain how we use these?
Well, for me, the 200 moving average is above or below gives me the trend. So right now, being below the 200, the trend is down. So I'm looking to sell it. The 20 um, is obviously a quicker moving average. Gives me an idea of the the shorter term momentum. Um, and the 50, obviously in between, is a medium term moving average. But one of the things to look for is the cross of the 20 and the 50 um, that can set short term lows or highs. We had that cross up last month. We had a severe break off of that. Um, Now we're right back to being even, but it's all under the 200 moving average. If we just removed the 20 and the 50, to me, the most important is the 200. Um, with that, I use it as okay, I'm looking to sell it. And I'm not looking to buy it. It can go up without me, or I can lose a little bit trying to sell it.
Makes sense.
So that's how I look at them. Try and keep it as simple as I can. Um, and that in a nutshell is pretty simple.
Awesome. Thank you for that, Coach. Juan Wick, I saw your question about gold. What has to happen with gold so we can catch it to the upside? Somebody has to buy it. Uh, there is, some potential demand down here on the daily in this 2650 area. Um, every time I've tried to buy gold over the past couple of days, I've taken losing trades. So uh, I need to see convinced buyers stepping into the market in order for me to buy this, at least for a day trade. Um, Anything else on the treasuries, coach? We were on the 10-year.
Um, no, that's about it. Um, we do have a question. Maybe you can address it.
Mhm.
Um, Cole was talking about the VWAP pinch. Can you
Okay.
discuss this?
Yeah, for sure. We talked about it a little bit on fast markets today. So what we're going to look at is two different VWAPs. I'm going to put one on the New York session open. That's going to be the red one, and then I'm going to put another one on the full session, which starts last night at 5 p.m. Central Time. We'll make that one green and the other one is red. So the pinch that Hogue is talking about is when price gets consolidated between these two VWAPs, right? We can see this consolidation here. Um, Normally, what it means is in between this range, you're not taking a trade. But then when you get a move out of it, it's a pretty strong move, and then you can go with continuation of that move most of the time. If I'm looking at this VWAP pinch, again, everything I do, guys, is based on volume. So, in order for me to get a confirmed move out of this pinch, I'm looking for a spike in volume, right? So we had this pinch here before we got this big spike right here, right? We had price kind of in this pinch, chopping around in this 20-point range. It did leave, but look at the volume, right? There's no convincing volume moves out of this. So I can't, this is how I've gotten caught in false breakout moves where I'm like, oh yeah, it's leaving to the low. I gotta short it. Or it's leaving to the high. I gotta get long. But there's no volume behind the move, and we need volume in order for follow through to happen. And then we get something like this candle, right? Where that's a spike in volume relative to all the other candles that traded. Um, Outside of the first hour of trade, that's the highest volume candle that we had for the day. And if you watch Topstep TV, Fast Markets this morning, you don't have to watch the whole thing. I would just go back and watch from like 11 a.m. Eastern for like 15 minutes, right? Where we talked about the pinch, and then all of a sudden we got this price action and we started to look long. Why? Not just because we broke out of the pinch. We talked about an explosive move happening outside of this pinch, but we got the volume to confirm that, right? We got a volume spike, we got some follow through, and we can start to see that this volume holds, right? So I think where I got short, I did get long. I should have held this long. I got long around 40s, around the 40s, and my stop was at the 20s. So I should have just held it, where it turned out to be a pretty good trade. But this trade happened in my mind because we got a volume move outside of that pinch. And then we got a similar thing here, right, where we're back in the pinch, need volume to kind of confirm a move out of it. And you can take some of these, but in my experience, they're so low probability if there's no volume behind the move that I'm okay not taking it unless I see some volume. But that's it there. Green Machine says, will I still take trades even though VWAPs go flat? I will. That's to me my time to practice being a range bound trader. If I'm going to do it, but I'm not going to put as much risk behind a range bound trade as I will a trending trade. But I will still take trades, much smaller size though. And like you could see for today, for example, I went to a combine because I said I didn't want to put risk behind a low probability setup. But I'm on Top Step TV, so I got to trade something. Um, and it's good practice. It's good practice, right? It's not something that I'm ever going to do with real money behind it, unless I'm extremely confident in it. But it's good to practice. Uh, all right. So last FOMC was November 7th. Let's go back there for a second. We got some traders asking, what's the plan going into tomorrow? Was it November 7th? We had a rate decision.
No, I think it was here. Sorry, I should have checked. I have it marked somewhere.
I think we got it. November 7th. Was that a Wednesday? If it was a Wednesday, we're right. November 6th was a Wednesday. Okay. So here we go. Look at the unless we got the rate decision on Thursday because of the election. I don't know, man. Um, let's go to the September rate decision because that one didn't wasn't around the election. So I'm gonna go to September 18th. Let's go to September. All right, here we go. So we're going to look at the day prior to the rate decision, right? This is today, technically, right? This is the Tuesday prior to the rate decision, where we had some choppy price action to start. Eventually, we leave that range, right? So decent day, but pretty choppy price action. I know for myself, going into the day before a rate decision, I'm going to say the same thing. I'm not expecting much of a directional move. If it happens, it happens. But this looks a lot like today's price action, right? Where a lot of overlap, not any real decisions about direction in the market because we have a rate decision coming out now. Whatever happened this day where we saw some volume pick up, it presented a nice trade, but on a day before FOMC, my expectations aren't going to be for this. Now anything can happen, but I'm just going to set reasonable expectations for the day. Right now we have the overnight session prior to FOMC. Right, that's about our 30-minute range there. And this is just going off of what happened the last time. We had price move outside the range, volume move outside the range, not much of a directional move. We kind of chop around and then look at the price action on the day of the rate decision, right? Where there was a decent trade. I actually remember this. I think I was on TopstepTV for this day. Um, where it presented a decent urgency trade to the short side. So can we say, oh, don't trade FOMC morning because it's not ever going to present a good trade to you? It doesn't make any sense. See what the market presents, right? Show up to the markets every day, understand what we have coming into it. But coach, would you take this trade? I think you're on mute,
Every time.
right? FOMC day, um, if it's your B day, whatever it is, right? Take the trade if it's presenting itself to you. Um, now
Now,
go ahead.
with that said, you don't have to trade. And by
Correct.
the way, that Fed announcement doesn't come until the afternoon.
Exactly. Exactly.
And one of the things and the advice we give, and this goes again, don't trade, right in front. What I mean, right in front of it. It's, the announcement comes out at 1 o'clock Central
Right.
and 12:58. I throw out a
12:59:30.
lottery ticket and buy five. If you're doing that, then no. But once that comes, you should be flat an hour beforehand. Let actually, and I would say because it's in the afternoon, you're done for the day.
That was my exact point. If you can catch this is a setup that we talk about every single day. You take this trade, there was anywhere from 40 to 60 points available, 20 points if you wanted it. Shut your platform down and just enjoy your money for the day. Because that could be a great day, right? That could have been your whole day right there. Um, where we did get a nice move afterwards, but you don't. And then, like you said, coach, this is 12:57 Central Time. Not the time to be putting on a position. Because even if you were right about the direction, the market dropped 72 points in
No,
this 3-minute candle before it moved to the upside. Don't trade in that. Don't
no,
don't trade in
I'm
that.
going to go through that. Yeah, don't trade on, and then I want to give you the market makers in front of this number right there is why you have that wide 75 tick drop or point drop, even
Yep.
worse.
Thin
They
books.
take back, instead of being 100 up, if they were 100 lot traders, they're now 5 lot traders. So why? I mean, if they have ungodly amounts of capital, no need for you to get in there. You might get lucky, and I heard there's guys who try and game the system until you don't game it and you blow out.
Oh, the system will game you.
So be careful. But
Di-
if you're going to be a serious trader, don't do it.
yeah. Yeah, there's no reason to. This is a 265.3 minute candle on the Nasdaq. Even if you're trading with micros, right? And if you're on the wrong side of that, you know. The one thing I do like to do though is, and we know we have the rate decision, that we have the press conference coming out afterwards. I'm always going to frame out the high and the low of that candle, anchor a VWAP to it, and then that's where I'm going to see some opportunities, right? And then trade it the same way I would trade any range with VWAP. That VWAP stays in the middle of the range, maybe giving me potential to fade some of the extremes of the move, if I'm going to trade this at all. But then, still aware that there's the press conference that's happening. So I'm not going to trade with a whole lot of size, if at all. But we can see, right? The decision comes out, the market chops around. Fading the extremes of the range gives us some opportunity for longs here. But even this, just as a long, how many points? It's a 40 point move outside of that range before we eventually bounce back. Got to ask yourself, is it worth trading it? Is it worth trading it? There's always,
We're at time,
tomorrow's Wednesday.
Coach.
There's always Thursday. What do you say, Coach?
We're at time.
Oh, well, thank you. Thank you for cutting me off. I would have kept talking. We're at time. Remember, there's no slow markets tonight. Dakota's taking a little bit of time off. But thank you all for joining, Coach. Thank you as always. Trade well, trade
Thank
smart.
you.
What do you got before we go, Coach?
We just talked about it. Don't trade out in front of that number. You can trade in the morning. Focus on executing your plan with risk management, and you should do well.
There we go.
All right. Good luck tomorrow.
Good luck tomorrow. We will talk to you all then. Have a great night. Bye.
All right. Bye.